unemployment claims. Previously, we're at 215, and there it is, as expected. So we'd probably expect little to no market move. And, here's the thing, right? So there's all this concern that companies are freaking out and that companies are going to be laying people off dramatically with all this tariff stuff. But again, we've got yet another week where we're not seeing a massive escalation in unemployment claims, right? 222,000 unemployment claims. That's not scary territory. That's actually still resilient in terms of the labor market. So all things considered, when we take a look at kind of the scenario that we're looking at, we could take a look at the U.S. economic heat map for just a second. So unemployment rate did tick up, but it's still at 4.2%. That's not so bad. Wage growth is still above inflation. That's good, right? CPI is at 2.4%. We dropped pretty substantially on CPI, and on the producer price index, we also dropped. So inflation in the United States looks a heck of a lot better in the last, 12 to 18 months. It's really seriously improved. That's a positive thing, right? So we have oil prices down here recently, which is also helping the inflation story. But we've really seen in the last, year plus that inflation has continued to make good progress. We're still in the right direction, even if it's taking time. So I'm basically making out my case for why I don't think the base case of a massive recession and sell the stock market because it's going to crash. I think I'm still on the other side of that. I'm not in the camp of thinking all of this, we're getting headline scares every single day, but I don't see it yet forming a base case of, we're going to have a recession, right? So when I look at this data, we have unemployment claims. The updated data will come out shortly. But overall, this is not in a super threatening territory for jobless claims. We have NFP. We'll get fresh NFP in 2 weeks or so. We have GDP growth, which is at 2.4%, which is slowing, but still not at devastating levels. We'll see how that rolls in the coming year. That's going to be interesting. PMIs were a little bit soft, so that's a concerning thing. We'll get fresh PMIs coming up soon. So we'll see what services and manufacturing PMIs look like. So the overall impact right now, like the stock market impact, is like mixed, right? When we look at all of these economic data reports and we say the economy looks kind of mixed for stocks and kind of mixed for the dollar, this is where I think you have to be careful because, again, the media is still very spooky out there, right? Everybody's so worried about a market crash and all this and that. And I think that you kind of just have to keep things in perspective and say, look, unemployment claims are not freaking out. Inflation's at an okay spot. Companies, while maybe still do see some uncertainty on the horizon, we don't have like this guarantee that we're going to enter into a horrible recession. And again, a lot of people are very much scared of the headlines right now. And so I think that there is this room for, I've been talking about this possibility that we see some kind of short squeeze. The key thing that I keep looking for is this level on the NASDAQ, 19,200. If we can get that to break decisively, right? To me, that could be the beginnings of where we start to see this market bottom out and where we start to see this thing recover. And it could be pretty violent because, again, look at positioning. This is something that I encourage people all the time to look at. If you are somebody who is like, I'm super bearish on this market, this thing's going to crash, you may have your reasons. And I'm not saying that you're just dumb if you think that, because it could, right? The market can always do crazy things. But just understand that you are greatly, greatly, greatly in the majority of investors, okay? Take a look with me at the investor sentiment survey, which I believe we got fresh data here. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. Investors are still very bearish, like really, really bearish on this market. And the reason I'm telling you that, the reason I keep pointing that out on my channel, and if you watch every day, you're probably annoyed with me by now. I know I repeat myself a lot, but it's part of the process of analyzing markets, is oftentimes you do get very repetitive. But I want you to look at this and ask yourself, if you're super bearish, just be aware. Do you know that you are in the massive majority? Everybody already thinks it's going to crash. And the way markets behave, usually, not always, but usually when everybody kind of thinks something's going to happen, the market has a really amazing talent to do the opposite, or to at least, fake people out. So people are really bearish. They think, the market is going to have some sort of horrible recession. And while that could happen, I'm not like wagging my finger in the face of everybody who thinks that. I'm really not trying to say that. I'm just saying that's consensus. So when you know what consensus is the market is going to crash. Could it crash? Of course it could. But that's what the market is expecting. So if you get good news, this is the part that matters. If everybody thinks the market's going to go down and then you get good news, like for example, let's say Trump has a constructive phone call with the Chinese president, right? What's the market going to do? Well, everybody's bearish, everybody's short, everybody sold their stocks. All at once, short squeezes take place. That's how those form. Everybody gets on one side of the boat, and then good news, while it may not come today, may not come tomorrow, may not come in a week or 2 weeks, when it shows up, the move in the other direction can be violent. Does that make sense? It's like stretching a rubber band, right? When you get the rubber band very stretched, it can snap back. Now, granted, this is actually the perfect analogy, this rubber band concept, because what if the rubber band snaps? That can happen too. Again, I'm not here to tell you that the certainty is that we're going to snap back, but most of the time, there's a snapback. Most of the time. Every time? No. If the bears are right and the rubber band breaks, yes. If we get a full, you want to here's a couple things, and they're very China related. Like that's the thing right now. You want to talk about what gets this market to really freak out? You want to see gold go to 5,000. You want to see gold, or you want to see the stock market crash 30, 40% from here? Here's how. You ready? Let's give you bad and let's give you terrible. Okay, so here's bad. Bad is that we go into a really trench warfare in the form of a trade war that just takes a long time and there's no concessions on either side, and trade in the global kind of dynamic gets hurt. That is bad. But do you want to hear what terrible would be? You want to hear what gets gold to 5,000 in a hurry? You want to hear what goes, NASDAQ and S&P down 20% from here, 30% from here? Ready? Here's terrible. Terrible is China invades Taiwan in all of this and takes it from just a trade war to actual war. That's the black swan. They've talked about it for years. They have made that point many, many times. And let's just hope that that doesn't actually happen. But if the trade war with the United States goes on long enough and gets bad enough, and things are already severed so much, China might make their move on Taiwan. Okay? That's the black swan event. That would send gold, in my opinion, that sends gold to 5,000. That sends the S&P 500 30% lower. That would be the black swan event. But here's what I'm getting at. You ready? Because this is the important part. I don't think you can bet on that. People have been saying those things for years. Okay, so here's where practical trading, practical investing comes back into the picture. I just mapped out the doomsday's favorite topic right now on YouTube. The doomsday YouTubers, the traders, investors who love to sell that fear, right? I just mapped out. You can see how interesting this topic is. You can see why those types of things get so many clicks. That's a black swan event that you, in my opinion, can't base trading around. You can't base your investing around because you can't call that. And even if you say you think it's going to happen, okay, great. When's it going to happen? In a month, 6 months, 12 months, 2 years, 5 years, 10 years? What are you going to do? You're going to short the market for the next 10 years, right? That is a silly thing to try to call. So while that's fun to think about and it's a fun experiment to go through in our heads here, we can't call that that's going to happen, and we don't know that that's going to happen either. So what can we do? Again, you can theorize all that stuff and you can make those those are what I call, I stay far away from that stuff. That is straight up massively speculating on what's going to happen in markets. You're making a wild bet. And if you're right, there's like a 1% chance you're right. If you're right, you make a ton of money. But 99% of the money, 99% of the time, you miss out on big moves. You lose a bunch of money trying to short. So that stuff is fun to talk about and to think about, but it's not something I actually can base a trading plan and strategy around. So what can I do? Well, I can focus on, what I can focus on, which is market sentiment's already reflecting terrible stuff's going to happen. We have an economy that seems to be holding up okay. We have a top setups page that's giving me the idea to stay bullish on things like NASDAQ, Chinese stocks, which is a fascinatingly high risk idea that I want to look into more, not as in the form of I'm not going to take a big position, but it's an aggressive idea that if there's US-China relations that improve from here, the Chinese stock market and the US stock market are both going to rip. So I'm hopeful that actually things will be more optimistic. The president of China made a visit in recent years to California. I thought, and I was hoping that would lead to more prosperity. Look, I massively want US and China relations to improve. I'm a Tesla shareholder. That is incredibly important to me. We'll see if it happens. I think that both nations know they need each other, and I'm optimistic overall. Back and forth, right? You're getting these headlines that are in one day very exciting for the market, then very scary for markets, and then you're getting good news and bad news, and it's of course also reflected in the yen, which as the standard kind of risk on risk off currency, it's been doing pretty well, but you're still seeing these kind of big fake outs, right? If you look at JXY, which is the currency index, you can see it does of course have gaps in it due to its trading hours, but you can see the gaps actually tell a story. You're getting these big moves up and then gaps up, fills, and then gaps up and then fills again. You're getting this big gap up, fills. So you're seeing these intraday, intra-week spikes in both directions on a lot of different charts. Dollar index to Marco's point still looks really weak. We'll see if it does get a little bit more of a retracement up into that 38.2%. I'm very curious to get you guys' thoughts on the dollar index itself. Marco, what do you think about it? Do you think, so you mentioned you think there's more downside. How much more downside, and where would what charts look or levels look interesting to you on the dollar index?
Yeah, so for the DXY, if we take a look at the daily chart, I mean, the technicals and the momentum is still heavily bearish. This candle that happened on the 22nd was bullish, but it's just one candle. There was no continuation, and the downtrend seems very powerful with these massive moves. If I go to the monthly chart, maybe we can get some levels on there. I mean, it's pretty much a big empty space up until this level of 94.7, but these levels are not really something I pay much attention to. For me, the most important part would be the momentum on the daily chart, which is, as I mentioned, still very, very bearish. What would make me, let's say, change my mind and make me go bullish would be if we got two massive consecutive bullish candles on the daily chart. That would be a nice sign of a potential uptrend, but right now very bearish, which means euro dollar is a nice buy, pound dollar is a nice buy, and I do believe gold is still a nice buy as well. Just waiting for the edge finder confirmation, and then I would be pretty interested to look for buy setups. I know we had recent talks from Trump about lower tariffs on China and not firing Powell, but again, I do think the overall sentiment is still pretty risk off, and the damage has been done. I do think generally people are still very scared, especially because Trump changes his mind every single week, which makes anything he says pretty unstable. And like, you cannot make a conclusion from that, but you can make a conclusion from the overall tariff environment, which is risk off and bearish for the dollar.
Well, think about this. I heard something really interesting. I'm curious you guys' thoughts on this too. I was listening to some people discuss this environment from like the hedge fund perspective. Like, if you are managing a ton of money for people right now, I think a really natural response that most managers and investors are kind of looking at is, this is a really hard environment to take a bunch of people's money and just put it into stocks because of what you just said, Marco. You're getting one day things look great, the next things look terrible, and you're getting this news cycle that is, constantly the layout, the look ahead is changing every single day. One day we look like we're going into a recession, the next day it looks like China wants to make a deal. So it's really kind of to your point, gold typically does really well in these types of environments because a lot of investors and people who are managing money on behalf of clients may be saying, well, I can't, in good faith, I can't put a bunch of people's money into equities. I can't put a bunch of money into Bitcoin. I can't put a bunch of money. Where can I go? And then gold becomes this really attractive alternative where people are like, well, gold, if it collapses, it has lower volatility than stocks. So if gold drops, it's going to drop by less than the NASDAQ. And so I can still get some sort of return. People have been doing really well with gold. So it's an interesting story on the fundamental side. And I think that a lot of investors are on the sidelines waiting for clarity. They can't, in good faith, put money to work in this market until there's some rules of the land that actually are stable. As you're pointing out, you're getting movements that are very hard to make big investment decisions, moves of 10% in a day and down 5 and up 5, and you're getting just these crazy moves. So Miko, I'm curious your thoughts on all that too, right? So you're getting an attractiveness. You can see why metals are so attractive. It's so obvious because they're such an attractive alternative to what I just described. If all three of us had a $10 million to manage on behalf of clients, and they're like, we don't want you to be sitting in cash, we want you to be invested, where would you go? Most people logically would probably go to gold. They can't go into the NASDAQ, at least not for the short term, maybe if they have a 10 plus year horizon, but it makes for a challenging environment. You kind of see why the attractiveness to gold is there. It's kind of a crazy environment right now for metals. Actually, James in the chat just said Edgefinder's at 100% retail longs on silver. I do want to just point out, so James, with retail sentiment, right? One of the things we've struggled with when it comes to CFDs is because when you're trying to track like crowd sentiment on like XAU USD or XAG or NAS 100, there are many different products that represent the NASDAQ or silver or whatever. So what we've actually done in the last 6 months or so for sentiment on the Edgefinder is we actually use the put to call ratio for several symbols that are not currency pairs. Currencies are a little easier, but for things like silver, the Nikkei. So what we see right now, to James, your point, you have some interesting extreme greed specifically on silver, as the put to call ratio is really, really low. So people are out there buying calls really aggressively on silver. So that also makes me a little bit cautious. Miko, your point about wonky price action is also kind of interesting. When we look at gold, we actually see kind of a different story. There's some divergence that we've been seeing in recent times with gold and silver. On gold, there's a lot of people buying puts. Like, people are bearish on gold, interestingly enough. And then on silver, again, this is data from the options market. So we have a lot of volume here to get an idea of sentiment. So silver, everybody seems to be bulled up on. And then on gold, everybody seems to be a little bit more cautious and bearish, at least on the options market. Very interesting to look at. So yeah, I mean, to me, I'm the same way when it comes to what you pointed out, Miko. I think the chart for gold looks a whole lot cleaner right now. It's actually like trending up, whereas silver had this just monster move down, and then now this V-shaped move back up. It's just a crazy, crazy environment to see that. I also wanted to ask you, Miko, because Marco mentioned it for a second, the dollar crosses. Are you watching euro dollar? And I guess the question I have for you is, would you buy, here, like, 1.13, or would you need a bigger retracement in order to get long if you're still bearish the dollar? What are your thoughts on euro?
Yeah, I'm still pretty bearish on on the dollar, but I do need a bigger pullback than that to get long, because the way I'm thinking right now with the dollar and euro is that we've had a really big move. We've taken out massive areas of support. So my expectation is that we need a little bit of a relief in that before I can expect another big move, because that's my goal, to try and catch some of the bigger moves in the market. And typically, if you already had a big move, of course, price could still keep falling or keep rising, but we do need to be a relief in that before I can expect more selling pressure to get back into the market. So for the dollar, again, I'm not looking for anything crazy. DXY, if we pull back into kind of this 101.5, 102 area, even 103, that would be nice. For Euro USD, I'm looking at 1.11 and also 1.09. So just these areas below, nothing too particularly crazy. If I was to whip out the fib from the low to the high, more or less 50% of that last kind of up move. So that's where I feel comfortable buying. And I know that if we were to respect those areas, I probably could still catch a decent move back to the high that has a decent risk reward to it. So there's some support up here, but preferably I want price to come a little bit lower.
Very good. Yeah, no, the Euro's been one that I've been waiting for that opportunity to get long as well, and just feel like I'm a broken record on it. It's like, man, I want the longs, but I gotta wait. I know I got to be disciplined. Cameron with the $5 donation to the stream. Thank you very much, Cameron. That goes right towards our coffee fund here at A1 Trading. We go through a lot of coffee in the office, as you might imagine. So thank you very much for supporting the show. It says, I'm short-term short on gold, but I trade by wave patterns. Yeah, I think that it would be hard for me to sit here and defend looking at this chart. I think all of us would say, like, if you're looking at the 4-hour chart, clearly the one-sided momentum has faded for gold. I think, Marco, you mentioned the same thing. We both kind of pointed out, like, that easy money trade that was just going up. Marco, you and I were chatting on Twitter about it. It's like every day it just goes up and up and up and up. It feels like it's like broken, like it's just trending up every day. Well, as we know, all good things must come to an end. We started to see a bit of a loss in that momentum. I was talking about this earlier. I do think I may be willing to try and take a stab at it long if we can continue to hold this level of support. But to be fair, if we take out that level, we do have room to continue to pull back. Still be, Cameron, I like you pointed out, short-term short on gold, right? Because if you're talking about long-term short on gold, I think the trend is really still in favor of the bulls. But we'll see. Maybe you get some good news out of China and we get some larger scale correction on gold. But I mentioned this earlier, really where I'd be most interested on gold would actually be if we do get a couple waves down and we get a move back down to like 3140, 3150. I like that area a lot more.
What's happening, everybody? Happy Thursday. Welcome back to the session. Just take a look at this morning's heat map to see where things are moving or shaking. We have some earnings coming up today. We had Tesla this week. We have Google today after market. I took some shares I added into the pulver list. I bought some shares of Intel. Tesla is up to 255.19. I've got a covered call this week at 257.50. If I get it called away, that wouldn't be bad. That would be an immediate flip for $5,000. If it doesn't get called away at 257, that's fine. I will add another covered call for next week and continue to go on the repair route, try to lower the cost basis aggressively. Let's see here. So advanced decline lines for the day, we're about 67.7 advancing. There's some green sprinkled in. IBM shares actually beat top and bottom earnings, but down on the day by about 6%. I saw that Palantir's up near highs again. Let me get logged into my Thinkorswim. Take a look at some other plays. So for the morning, looking like we could just have a bit of a slow drift. So SPX kind of working its way back into possibly, yesterday's highs. We still, if you take a look at the Wednesday high from April 9th, we still haven't hit it. This high was 54.81. We've come close 1, 2, 3 times, maybe 4th time's the charm, but I still think there's a lot of resistance right in there. Today's price action, especially if we are heading up into test yesterday's highs, or we have another, perhaps a lower high. I'm curious how today's price action plays out. I got in for a trade this morning, kind of splitting the difference, looking to see, price could fill the gap, price could test the highs, but I just want to see how price behaves. We'll find out. But as I've noted here the last couple weeks, lots of resistance around that 5,500 handle. The 200 moving average would be, this is the trend line that we should all be watching right here, right here. The bulls might get a little bit more excited if we were on the right-hand side of this trend line. Okay. I still think this potentially is a bull trap scenario, so I want to be mindful of that, but it does give us room. If we can clear the April 9 high, it does give this market room to get up into the 200 moving average and back into this cluster of support resistance where all the nonsense and damage was happening. So this was Mag 7 rotation, this was tariff talk, and this is Liberation Day. Define it however you want. Point is, if we're on the right-hand side of the trend line, the bulls can get a little bit more excited, but in this area, the bulls still have to prove that they can, somehow carve out new highs. I don't know if they're going to be able to. I could see this setting up with a, bullish pattern in here. Okay. But it's going to be volatile just because if we don't break this neckline, we're not hitting all-time highs. I could see this being, a big bull trap if you're not careful. So I'm still not taking, it'd be like a pleasant surprise. If we get a pleasant surprise to the upside, then obviously above the neckline highs at 5,800, sure, there's upside there. Go test the highs, go target the highs, yippee skippy, and then be prepared for, maybe a retest of the lows. I still think that this kind of July to January window moving forward is going to be a really important time for the U.S. to still show its resiliency, back off on the tariff stuff, get these solutions rolled out for this trade war, see if U.S. and China can play nice together. Maybe they do, maybe they don't. All right. But nevertheless, just watching for the morning. So we've got some prices that are up. S&P's up over 1%. NASDAQ up about 1.7%. It's pretty impressive there. But still not above the highs from April 9th. So still watching that level. Move this chart alarm down right there. See if that gets tested. These levels, I can delete those lines now. So we'll keep an eye on it for the morning. Dow's up 0.47%. Russell's up almost 1%. VIX is down 27. Bond volatility is down. Let's see if we're getting anything on the 10-year. Not really. Just minor improvements. TLT. Yesterday was a big volatile day for the bond market. So TLT was gapping higher, faded. Today we're gapping up, but we're not making any new highs. Let me see if we get a high at 89.06. I'll put check US 10-year. I'm just looking to see if yields are going to go down. Global yields have been going up, which is why this US 10-year has been so sticky. I don't think that the US is super excited about seeing this kind of break in the bond market. I'm very curious, like June to December, if the Fed starts cutting rates, what these yields end up doing. Global yields are going higher. That's why the US yields have not been, dramatically lower. Obviously, they lowered on the market falling, right? Market fell. I mean, this was peak to trough of 21% in the S&P, and we fell by maybe 100 basis points. But interest rates have not improved at all. We had a 95 basis points drop in the 10-year, and there's no way that, mortgages didn't improve that much at all. So we're right back where we kind of started. It's actually kind of worse because credit spreads have widened a little bit. If you go to Junk, JNK, so we've come back from a pretty nasty scare going into April 7th, April 8th. That was when the bond market was kind of showing its cracks. So same thing here on LQD. But keep an eye on this. I mean, if this continues to go up, that's a good thing for liquidity. If this continues to go down, that's a bad thing for liquidity. Watch your 10-year spreads or your 10-year yields. It's going to be important. We talked about this as far as, is the U.S. going to go into recession? Until we start to see this is initial jobless claims, until this starts ticking higher, trending higher, until continuing jobless claims is trending higher. So this goes back, I mean, even this last 4 months right here, it's like everything's been consistent. So we're not really seeing any major trend on continued jobless claims or initial jobless claims, but important to watch. Unemployment rate sitting at 4.2. So, I mean, so if you want to look at those tickers, you have TradingView charts. USIJC, that is initial jobless claims. USCJC is continued jobless claims. And then UNRATEN, whatever it is, UN rate. Just type in unemployment rate. I'm like, the symbol is UN rate NSA. Just type in unemployment rate, 4.2. So until these three collectively are going higher, this whole talk of U.S. recession, this market can still climb the wall of worry. The U.S. recession or the U.S. economy can still show some resiliency. So it seems to be like everything is okay. I would still agree with the comment that this market is desperately looking for something to give it some reasons to go higher. To what degree? I think, I mean, we could go higher into this noise. We can go higher into this noise where all the mess was started. We could surprise to the upside, and I don't know how that's going to be. I don't know how we get to all-time highs unless everything from the trade war and tariff talk is like backpedaled to, okay, look, we're just going to do 10%. We're negotiating. Everything's good with China, and everyone's happy. Then maybe all-time highs are justified. But if we're still uncertain on trade war and we're still, kind of floundering through earnings that are some good, some bad, I don't know. I think there's a chance to hit some pause buttons around the 56, 5700 area on SPX. So we'll go to dollar index. Dollar index still sitting at some pretty crazy lows. You can get down to a smaller time frame. Here's a pretty easy chart on the dollar. Here's a 1 hour time frame, and here is a 200 moving average. Okay, if the dollar gets back above a 200 moving average, it's probably going to be in a near-term buy zone. Not a huge one, but a near-term buy zone. Now, I also wouldn't be surprised if the dollar tests this 200, comes back down to the lows, or makes either a higher low or an equal low, or even a lower low. But I think that's going to be a bear trap, oversold divergent condition, and the dollar probably comes back up. So I could see a bottom forming on the dollar. This is one of the first times in history that we've seen such terrible conditions in the markets, with the markets dropping, seeming like it's a systemic risk globally, risk off trading, and yet the dollar's been beat up. So again, this is kind of that discussion of gold's been a better alternative than the dollar for a safe haven type trade. Bitcoin has certainly proven its ability to maybe even get out of the high beta characterization. Right. I mean, everyone's thinking like, okay, you've got beta at 1, which is the S&P 500. Everyone's thinking like Bitcoin's probably a beta 2, beta 3, right? Meaning like it's 2 to 3 times more volatile than the S&P. Well, if now it's 1.2, 1.5, that's a big improvement. We're seeing less volatility in Bitcoin. Give me 1 second. All right. So Dollar index. What I'd be looking for here with currency trades is if the dollar comes back down to revisit these lows, not picking the bottom, okay? But if it's testing the lows and bouncing back up, we probably head back up into these equal highs. If it goes slightly lower, I'd still look for this market to then turn, look for a trend line break. And all it is a pullback, and to me, like a pullback to 100 or 101. This is the outer trend line on the dollar on the higher time frame. You'll see this on the daily chart. So if you go to the daily, the dollar is still in the sell zone as long as we stay on the left-hand side of this trend line, right? So this gives the dollar a chance to, figure out where the bottom is. Maybe it's here around symmetry, and then we pull back into past support becoming resistance. We pull back into this trend line area, and then the dollar makes a decision. Does it go further down? Does it break this trend line? Do we put in an actual low that's tradable? So, as I just said before, if you're short the dollar, which means you're long Aussie dollar, long euro dollar, long pound dollar, long New Zealand dollar, you get it. Moving stop losses. There could have been enough volatility the last couple of days. You might have been stopped out already, which is fine, and just see what the next trade is. So I think the dollar is going to give us a setup. I wouldn't call the bottom necessarily, but a move to symmetry somewhere in here, trend line break, watch the 1 hour time frame above the 200 moving average. I wouldn't mind seeing the dollar pull back towards like a 101 or even this trend line around the 102. But then from there, yeah, I could see the dollar resuming a downtrend. I mean, if we're really going to see this big shift where it's like anti-dollar, losing global reserve status, blah, 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 then yeah, the dollar's going to get way weaker, So, but until then, I think that it's sold off far enough and fast enough that we're probably closer to coming into some lows and bottoms on the dollar. Oil, gold, silver. Oil at 62. I'm going to keep a close eye on this one. As I said, I mean, we might pull back into this multi-month support, and that might offer some resistance. I probably won't do much with that one, but I think what I'd prefer, and I've talked about this week, is if oil comes back down to the lows. If we come back down to the lows, I'm looking at taking like a risk-defined bottom trade and see if it goes back up into this floor. So I could see this level being pretty important, where we don't necessarily break in oil's in major crunch zone, but we're not all of a sudden seeing oil. I mean, I listened to a macro podcast last week, and this guy's like, I see oil back to $100. That's, I mean, he had reasons, but I'm like, that's way higher, man. Like, that's going to break so many things. If we have oil at $100 a barrel, that's going to break so many things. So I think that oil still is like a very supply and demand range driven instrument. Unless we have like crisis happening, I don't know. But that would be crazy. I mean, I can't imagine if we're back up to $100 a barrel, like what that's going to be at the pump for US, let alone the world. So anyway.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.